Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell for Thursday, August 18th. It is 6:16 a.m. as I'm starting the video, and as always, please run your player at 1.5x. Taking a quick look at futures, the energy complex is up about 1%. Got oil up 1.25 and natural gas up 1%. The rest of the futures are all ticking green, but not markedly so. Over on the macro front today, of course, Thursday, we've got jobless claims. Then we've got the Philly Fed index, existing home sales, leading economic indicators. That'll be interesting to watch. And then we've got nat gas inventories at 10:30. And just as a side note, nat gas pushing 14-year highs. And remember, Europe is paying about 5 times that for nat gas, with the Nord Stream pipeline from Russia only pumping out about 20% of capacity. So that's really been throttled back. So, and don't forget, this summer, there was that Freeport export terminal fire that closed down one of our export facilities in natural gas. I'm not sure the timing on that, but that'll be coming online in the next, 6-8 weeks. And that's going to put further upside pressure on nat gas, because I would assume more is going to be heading to Europe as the temperatures, as they prepare for winter. So I expect nat gas to have pressure to the upside on prices. Jumping over in earnings, before the bell this morning, we got a lot of retailers at the end of this cycle. Kohl's, BJ's in the club space. Canadian Solar, I think, should be watched in the solar space. They've gotten a lot of bids here lately with green energy package. And then we've got Tapestry. After the bell, Applied Materials in the semi space, and Ross Stores after the bell. And then tomorrow before the bell, we've got Deere, which will be interesting, along with Foot Locker and Buckle in the retail space. So let's dive right into the charts, starting with TLT, our bonds. Down a little yesterday, I think about 1%. I think here, what you want to do if you're not in the trade, simply alarm 116.50 and 113. I think those are going to mark, kind of marks this value area for sure. If you get a downside break below 113, not a lot stopping it from a move down to 108. And on the upside, it'll be a little rougher going, more transactions up here. But above 116, it opens the door at a minimum for a back test of this trend line. And you get above 119.50, then you really got some running room up here. And even depending on how you wanted to trade it, if you said, I'm not interested in a recapture of the 50 down here, I'll just alarm 119.50. That's fine as well. But I think, a break back above the 50 and the 20 here at 116.50 would be, a place where you could get long for a run here. And then if there's an extended move, then you're already in. And this thing could run all the way up to the 200 up at 126. That would be a nice trade. VIX hanging in there, up a little bit yesterday. I think you want to set your, at least set a warning alarm at 21.50. That would be really, really cautionary. You don't want to be hanging out there with a bunch of longs once this VIX, if it were to break this trend line, it could really go fast. So I think you should have an upside alarm there, just as a cautionary warning shot on volatility. Bitcoin lost our 24,000 level. It is holding in there. It's up a little bit this morning, about at 1%, holding in against the 50, which comes in at 23,425. So we're about $100 above that now. And that all depends on where you set your stop. We had been talking about 24,000 being an important pivot level, and it still is. And we're 500 below that. So if there were to, if you're not in and you saw a recapture of 24,000, then I think that's a very objective entry. And if you were long up here, you just got to respect your stop. I think if you lose the 50 at 23,425, discretion's the better part of value. You just step aside and either get short or just get out of the trade. Up day yesterday in oil, we're up again this morning, so it looks like we're going to break back above that 88.25 level. Good day for refiners yesterday. I sent out a note, if you're not part of the group, lot of refiners are breaking above their value area, so they may be set up for a nice run, independent of oil. Remember, the refining metrics is the profitability of the crack spread, and while that may have some relationship to the price of oil, it really is its own beast. So that's that 3-2-1 crack spread, and you can look that up. 3 barrels of oil turn into 2 barrels of diesel and 1 barrel of gasoline, and it's the money that they make off of that cracking process. So there are lots of charts out there that you can track that, and even though the crack spread has come down, it's still historically high. Our oscillators have come down significantly from where they were just a few days ago, 70 down to 9. That's significant. So we're out of the dangerous overbought oscillators, and same thing with NASDAQ, from 60 down to 8. The interesting thing is, on our indexes, we have not seen a plunge in price. So from that standpoint, it's a good thing. The oscillators have relaxed. And if this thing wants to go higher, now we've got the room to move higher. And we haven't paid a tremendous price, literally, on the price of the indexes. So that's a positive. Moving on to SPY. We are wrestling with the 200 SMA that you can see right here. Comes in at, let's call it 429. We had a 5-day run, first red day in 5, and that only amounted to 0.71%. We did have that we had a soft first half day of trade, and then after the notes were released at 2 o'clock, we had a resurgence and then kind of a weak close. We are holding this trend line, which is, I dropped this in just for reference. I think you need to be quite concerned if price were to come down and break the uptrend line. They call them uptrend lines for a reason. You want to stay above to, keep that uptrend intact. And if you were to see a break, I think you got to respect that break and, pencil in a move back down to this big support area. We've got a gap there, but that was our 410 to 415. should be, at least on paper, rock solid. And if we were to break that, then, then we're going way down, in my opinion. And keep in mind, you've got the 20 rising. And let's just say it takes, a few days, if we do in fact break, unless it's some kind of catastrophic nightmare move, the 20 is going to be up above this gap. You could come down to the 20 and then bounce. So a lot of different scenarios, but you certainly wouldn't want to, in my opinion, just, sit there long and, let $10 come out of SPY without trying to trade it. And here we see really the lower part of this channel on the 1 hour corresponds to the trend line on the daily. Might be a little bit different. We came down yesterday to test the bottom of that line, and then we walked it right back up. I think today your pivot point is 427.50. You break back above that. I think you take that long and see what happens. You break down below the trend line, you've got to respect that. We could come right back down in here to 423.50 kind of area and, test that once again. You break below that, and then you're probably coming down towards 421, where there's this little gap here yet to fill. Qs have not yet made it up to the 200 SMA. You can see here we had a marginally red day, Tuesday, and then we came down, back touched this trend line. I don't know if we quite touched the 200, but we touched the 8-day. So that should be support. You do not want to break back below this downtrend line. That would not be good. You want to stay above that. And really just without getting too fine about it, I think 330 is your really clear pivot point on the Qs. And here you can see we made a reach down towards the bottom of this gap. The old gap, this has been filled, but there's still muscle memory there at 325.25. If you came down and broke that, then you're probably coming to 322.50. And then, of course, we've got a big $5 gap here. But again, that is our super big, important support zone now. Remember, resistance on the way up, support on the way down. And so, depending on how you want to tactically trade it, if we break above 330 here today, I think you should be long there and look for 335. But if we stay below, then the door is open back down to the bottom of this gap towards 325. IWM kind of had a rough day yesterday, 1.7%, dropped back down below. We had broken above the 200 SMA in black. We got a gap here. We came down to touch the 8-day. And I think that's a good reference point for today as a support level. Notice we've got one of the larger volume over price bars up in this area coming across. We'll see it better on the 60-minute chart, but you don't want to lose the 8-day, because then you can come down here to this 194 area, in my opinion. And you can see it here real clearly. I sent out a note early yesterday, or 11 o'clock, something like that, that in my opinion this 196 had to hold. Why? Well, you've got a ledge here on volume over price. You have a prior low right here at 196, and then you've got the uptrend line coming in at that same type level. So today, I think you can be long like above 198.50 and see if we can fill this gap up to 201. But if things start to roll over, you got to hold 196, in my opinion, because if you don't, then the doors open to 194 and, right on down the line. So I think 196 is a rather important level on the 60-minute chart for you to kind of benchmark. And then if it were to come down to that area again, you're always welcome to, try a long at support, buy support, sell resistance kind of thing. And then with your stop just below, if you get stopped out, then you got to be looking to the downside. Meta, kind of on the wrong side of the chart here now. We had this big upper gap. It got filled rather early, came back down to the bottom of the gap, made a move back up, but now I dropped in this trend line and we're below it. So now we're sandwiched in between the top of this gap and the bottom of this one. So I think you can use 176 as a pivot to be long, or you can buy the top of this gap. Just remember that you got a ton of support here at 172. Look at all these rejections. That makes support here even that much greater. And even if you got this gap entry at 174, I would be seriously considering, covering that short at 172, because that should hold, especially on the first touch. Now you get a bounce and it comes back up and then breaks it, then that's really, really bad, because you would have broken back into this big trading range, and then your target comes all the way down to the bottom of the range at 156. Now, we're on a 60-minute chart talking about active technical trading. If you were a guy that's, just on the daily time frame, and maybe you got a real job, which is fine, that's great, and you saw a close below 172, then that's your swing short, right? That's a short you're going to want to stay in for a while. You either get stopped out, or you make your target, or you get some other information down in here that would, lead you to change your mind. But I think it's clear what I'm saying is there will be a lot of these bulls exiting their positions if price comes back down below 172, because we're not the only people that have charts. There are going to be a lot of technicians that are going to want to sell that 172, a break of that. So I think that's your swing short. And then you set your stop, let's just say $2 higher, up at 174, because you got a big risk reward. You got 172 down to 156. That's a big risk reward. And even if you get just a fill down to 168, you're going to be already green on your position. And then you got a lot more flexibility if you want to trail a stop down, or just leave it as is, etc. So I think that's a super important level on Meta. Apple, really, really strong action yesterday. I mean, it didn't amount to much, 0.88%, but it was not buying that early half-day weakness. It hung in there, and then after the FOMC minutes, it went on a little run. It pulled back, but it was definitely outperforming yesterday. And you can see that it's walking along the top of this trend line. And you'll remember that just a day or so ago, this was resistance. Had to spend a lot of time trying to get above 174. And so now I think 174 is a really nice level to shoot against on the long side on Apple. Now on the downside, depending on how you want to play it, I wouldn't want to see this price come back into the channel. Remember, our first target would be the midpoint, and then eventually the bottom of the channel, which is, pretty far away. But given the strength, I would use this 172.50 as your level. It could come back down here. A lot of support, a lot of transactions along this line. You can see the volume over price bar get bigger there, indicating a lot more transactions. And so I would be a buyer at 172.50. But if that breaks, then you got to start looking to the downside towards the midpoint, coming down here towards 169, 160, 167.50, etc. And then if that breaks, then you've got a gap to fill. And if all that happens, then you can pretty much assume that the Qs are rolling over, and you'll have a lot of other evidence along the way of, Meta rolling over, etc. Tesla didn't really do anything yesterday. It came down, reached down towards this trend line. You can see that's been a nice level to shoot against on the long side. We were talking about it back here, came back for a touch, went on a big run, got stoned along this 935 line, and you'll remember that was an important level way back when. And so now you just want to hold this uptrend line if you're long and see if 935 can be taken out, and then that would open up 975 and 1,000 on the upside. You break this 900, 905 area, then excuse me, probably coming back to 885 and then lower. And I'll just make a point. Talking to some guy made a comment, I forget who it was, in the trading room, that he couldn't, trying to actively trade Tesla, just kind of struggling with it, reading between the lines, losing more than winning, and that happens. And what I shared with him that I want to share with you, if you've been trying to actively trade a stock and it's just not working for whatever reason, you can't get in the flow of it, you might not be sure of the levels, or just, bad luck. It happens. And what I've done in the past is, put it on the shelf for a while. Don't keep beating your brains out, because then psychologically you get screwed up. You almost feel like you're going to lose as soon as you hit the execute button. In your mind, you're losing because you've been losing, right? you get in that mini death spiral. Put it on the shelf for a week or two. Then if you want to come back to it, come back to it. And, if you do that 2 or 3 times and you can't get it, just put it in the too hard category. I mean, you've got 5,000 other stocks that you can actively trade that you will have more success with. So don't beat your brains out about, if there's a stock for whatever reason you can't get in sync with, just forget it. Don't try to prove a point. There are stocks, and I can't really think of any in my own experience, names that come up, in my mind of ones that I've just flat out given up on. But who cares, right? If you've been losing and can't seem to get in sync with a particular stock, just either give it a break or forget about it and move on to another stock. No shame in that at all. Microsoft, interesting chart. A lot of traffic here. We talked about the importance of 290. Big. If you go back to the daily chart, 290 is a super big line. And so now we've spent quite a number of days toggling between 290 and the bottom of this gap. And I don't think it's rocket science to figure out that one of two things is going to happen. It's either going to fail or you're going to get a breakout and you're going to fill this gap up to the top of the channel. So I think you can, if you wanted to set yourself some alarms, set it at, 290, 250 and 290 as important places on this chart. And if you get a break above 290, 250, get long for this, 350 gap fill, and or you can continue to buy 290 because it's good support and see if you don't get the move. But price really shouldn't come down below 290 for very long. There is support down here at 287, but 290 in my mind is the line on Microsoft. Amazon has also been struggling right here with 143.50. We had a brief mini breakout here, but now it's walking the line of this gap. And, you get a break below 141, then I think you can take that short for the gap fill down to, let's just call it 138. And that will be your $3 move there in Amazon. Google, there's a little gap here that I didn't put in yesterday on the open, but you can see that this 119 held all day yesterday, finished on the lows, but held here at 119.50. I think that's a good pivot point for this morning, depending on where it opens. If you get a break back above 120.50, I think you can be long. If it fails 119.50, then I think you're probably going to come down here to 118.50. And again, that 118.50, if we can look at it here quick on the daily chart, that 118.50 is your super big line of support. And you can see here at 122.50 is your 200 EMA. That's where we made a couple of runs at it, but ultimately, at least so far, has been rejected. So if this comes back and back touches 118.50, that's a solid long. Why? Because you're at super big support. And just like the meta setup, if you were a daily type swing trader and you're long right now, that's fine. You're long against support at 118.50. And if that fails, then you're looking at a move back down to 106, moving back into this big trading range. And then you got to flip short, in my opinion, just based on the technicals. Your first target would be down here at, let's call it 114. But then if that breaks, then you're coming down towards 111 and then 106. But you do not want to enter those trading ranges again. On Netflix, showing the 60-minute chart, we have that big $100 gap that starts at 247.50. We had a little gap entry here, ran into the top of this 1 hour channel. Now we're back below. I think here you want to hold 237.50 at the bottom of this channel. If that does not hold, that would open the door for a $10 move. I think that's a worthwhile level to alarm, because if you come down to the bottom of the channel, there's going to be support there. Why? You got a prior low and a prior high. And actually, there's a gap here that I did not put in. So you got gap support, you got a prior high, you got a prior low, and you got the channel here. So I think that would be a good long. Now, if that fails, then you're going to go for this gap fill right here, back down towards 227.50. SMH, bad day at the office, down 2%. We got a gap here. You want to hold this 238. At a minimum, you got to hold 236, or else you're coming back down to the top of this gap. So I would really like to see this hold and then this gap fill. And, I view these semis as a risk on, risk off asset. So if, semis are just eating it, then that puts a seed of doubt in my QQQ, type outlook. I always feel more secure if the Qs are heading higher and SMH is participating in that up move. Quickly through ARC, down 4.5%. You live by the sword, you die by the sword. Your high beta type group, you can see all the rejections here across the top at 21.25. You've got a nice level here at 20 inside of this gap. You lose 20, you're going to come down to 19.50, and then that's going to be a super big line to hold, because you've got prior lows and you've got a big air gap in the chart that would take you down into the 18s. So it's really got to hold 1950, and that would be an objective. Should you fill the gap, that would be a place for an objective long at support. You got prior lows and you got the bottom of the gap as support. So you give that a try. If that doesn't work, then you're on the short side. Same kind of idea here on ARCG. It was down 5%. So we're right into this high volume over price support area. You really need to hold 38.50, or else you're going to start dribbling down to 38 as a first stop. You get down below 38, then you're back in the weeds again. and rolling downhill. ARC K, flagship, bottom of the channel, bottom of the channel, top of the channel, midpoint, top, down at the bottom again. You lose 48, you got a big level at 47. So in my mind, 47's got to hold, or this thing's gonna start, rolling downhill again. So kind of ARC's got to get it together here pretty quick. ARC W in the gap. Gap is open down to 59.50. You do have another level of support here at 59. You got a prior high, a prior low. So you've got a level here. That's really got to hold, or else you're back into this little value range that could bring it down to 57 and even 56 on the downside. So those ARC names move really, really fast. If you get it right, you can make a lot. If you get it wrong, you got to be really diligent with your stops and honor them quickly. Don't wish and hope on an ARC name. If it hits your stop, get out quick and then recalibrate around the next level if you want to go long or short. So anyways, that's where we stand this morning. I don't think we've got enough evidence to say that, okay, that's it, it's rolling over. Most of our daily trend lines are intact. We have tested the bottom of some of these 60-minute channels, so we're kind of at an important spot, but I don't think all hope for a continued push higher has been abandoned, but we're relatively close. I wouldn't want to see those daily trend lines on SPY and IWM and the Qs break, because then we got more information to say, okay, our trend lines have broken. We got to respect that. Depending on how aggressive you want to be, get short for a pullback into a support level, or just step aside for a while, get out of your longs and set up for the next move. So really low liquidity out there. I mean, it's the end of the summer. A lot of kids are early back to school, but that doesn't mean, the traders are really, really back yet. Volumes are low, more wild moves to the downside and the upside. So always got to pay attention. Don't take anything for granted, and just go level to level. So let's wrap it up there. Hope you guys have a good day of trading. If you're new to the channel, thanks for stopping by. If you appreciate technical analysis, having a little game plan each and every day on trading your day, hit the subscribe button, the alarm bell, then jump over in the show notes. You'll find a link to the blog site where you can drop in your email address, and then morning, noon, or night, if I've got a thought on the market or a setup or a trade idea, I will certainly send it out, and you'll get it right in your email box. You won't have to hunt around for it. So let's wrap it up there. This has been Chris Buss with Traders Profit Compass. Have a good day of trading, and talk to you next time.